Hello, everyone. I am Royce Wells, and it is May 19th, 2024. The title of today's seminar is Check Please. And instead of using the arbitrage band to start out, we're going to be using the dash indicator as well as the Atlas indicator to tell what's going on with the trend and basically look at these charts just a little bit differently than we are accustomed to. Um, as we do, I want to point out that the atlas is drawing the support and resistance lines. Each one has a value that's associated with a band on that time frame. Like any good charting system, what happens on one time typically echoes into the next, which means they all exist simultaneously, which means in this case, using the indicators this way, the 1 minute time frame is our leading indicator that lets us know when the trend is changing to the positive or to the negative. So we see, looking at the S&P 500 SPY, that the 1 minute chart just trespassed underneath the 5 minute chart, which means a sell trend is just beginning on that 5 minute time frame. And if you watch the charts from the close of business on Friday, you would have seen, let's zoom all the way in. I'm going to turn off these guys just temporarily so we can see what's happening on that time frame. I'm going to turn these guys on just for the 1 minute and the 5 minute to give us a better view of our world. And since we're on the 1 minute time frame, we should see when the lines come back that a sell trend is just beginning. So this dip that started right here, it was able to pull itself back up, but when the 1 minute crossed underneath the 5 minute, it began a sell trend on our 5 minute time frame. So basically, everything and all this up that had been going on all the way since around the 14th Tuesday, when it was sitting at 521, was all erased once the candles broke support on the 1 minute time frame. Once it broke support on the 1 minute time frame, it decided to continue to descend until it broke support on the 5 minute time frame. But right as we got to the end of the day, literally about 2 o'clock on Friday, it decided, hey, we're going to pick ourselves up. We do see that the smaller bands on this 1 minute time frame are just at the eye of the storm and beginning a new sell trend. So going up to our 5 minute time frame, we also see it's a more macro view. So if I turn on the band just temporarily, you see that we are sitting at the very top of the band, and that pink line that we saw that it trespassed under is sitting up in that upper deflection zone and danger zone, which means there's a lot of resistance sitting up here, which should cause us to come back down. We can't get a sell trend on the 15-minute or any other time frame until the 1 minute and the 5 minute have succeeded. We also see that in order for the buy trend to successfully continue, we need to, on this 5 minute chart, make it back down to about 528.72. Until we do that, more buy is not possible, or rather say probable, in the near future. But we're not too far from that. That's only about 75 cents or so, so that's not too bad. Looking at this, going even more macro, we're seeing that the 15-minute time frame is also stacked up here. But what we should see, in addition to that, is that the trend top and the trend bottom is still saying that there is support on the orbit line. So there's heavy support sitting around 527. And that was probably the 527 that we just saw in the 5 minute time frame. If it can hold that line, then we can get some more up. Looking at this trend, what's probable is that we can get to maybe 544 in the S&P 500 in the very near future, meaning maybe 3 or 4 weeks. But there is more probability beneath the band than above the band. While it's probable and possible, it's a little bit unlikely until we basically touch the support that's sitting at this 523. Notice as we went up the time frame, the number that it has to touch also changed. And also notice that the compass line has made it underneath the RSI line on the RSI band, which means a new sell trend is just beginning on this RSI band on this 15-minute time frame. Going even higher, we see that the rally that began roughly May the 3rd, and we are May 19th, it was a nice 2-week or so rally, and we have all that saying we're going up, and nothing saying that it's time to go yet. We did hit the very top, and now we're basically watching this 1 minute flirt with this 5 minute to see if it will break support. We need volatility, and typically volatility happens this way. If volatility is going to go in a downward motion, the first thing it does is not go down. The first thing it does is go up, hit a ceiling of sorts, so expect to see about 531.80-ish, and then if it does hit that, then expect another sell-off as probability expands again, so we can test that 523 area that we saw from the 15-minute chart. Also notice that the intermediate band is also saying, check in, I'm not feeling safe. 526 is the number that I feel I have to touch on this time frame. With that being said, we're going to go to the intermediate band just to see what it's talking about. And we should see that the line, that pink line, is sitting at the very top there. And notice that the trend top and trend bottom is just positioning itself to try to actually make its way down. But once again, we need volatility. Volatility should spring us up first, allowing probability to expand, and then allow us to drift down into the next couple of weeks. Looking at this from the 1 hour time frame, we also see that on the intermediate band, we're in that danger zone, and 2 of them are actually turned on, 513 and 522. So there's a lot of volatility that needs to happen in a very, very short period to allow probability to expand, to allow us to get the downtrend or potentially even more uptrend, depending on which way it goes. Once again, if volatility heads down first, look for a bounce. And so if it's able to get to, for example, in this case, 526 and hold that as support, there's a good chance we could make it, like I said, up to about 543 in the next few weeks or so. So keep your eye on the ball. Looking at the 2 hour time frame, 2 hour time frame, that blue line for the intermediate band is not quite there, but the arbitrage band, the apocalypse band, and the infinity band are all voting for a little bit of relief. Looking at the arbitrage band on this 2 hour time frame, because we did go to a bigger time frame, the arbitrage band is still relevant in this context. We see that the black line is sitting at the top, and the trend top is sitting just on top of that black line as well for the 2 hour time frame. So once again, just a little nudge from volatility in the up direction should give us what we need for a downward trend. So let's keep on crawling this guy as we go. Looking up, we're looking at the 4 hour time frame. Look, this is happening on the 4 hour time frame too. Support is right about 522. So there's a lot of support in this area between the trend bottom and the RSI line on these time frames. But also notice that in order for the buy to continue, we have to hit some hard numbers first. So that means if volatility wants us to have more of an uptrend, we need to go back down and see 522, 512, and 493 in short order in order for it to bounce off of those numbers to continue its trek up. If it does not bounce, if it drifts towards those numbers, then more than likely it's going to be a slow, dull, dog days of summer recession and pullback. And why not? It's what we do, right? So what goes up must come down. People must take profit. They have to be able to go on vacation somehow, or so some say. All right. Looking at this from the 4 hour time frame, like I said, 3 are turned on. Let's go to the daily. Daily, what are we seeing? We're seeing that basically that rally that began once again at the very beginning of May 3rd, that Friday, pushed up and allowed us to get where we are. We do see that the trend top is sitting right against 3 standard deviations on our arbitrage band. So 539 could be the potential for a burst to the upside. And if it does make it there, then more than likely from there, lots of down will occur. But once again, there are 3 lights that are turned on that says, hey, if you bounce in any of these spots, the only one that scares me, quite honestly, is the infinity band. An infinity band at 418.97 on this time frame is ungodly because that's a $110 bounce. That's almost a 20% correction if volatility decides to be that cruel. But hear my words and hear me clearly. If it does hit that, and it does hit that quickly, do not panic. If it hits that quickly, go in with everything that you have, because once again, volatility always moves in the opposite direction of the overall trend. So let's go take a look at that infinity band. And before I get ahead of myself too far, let's talk about what I am and what I am not. I am not a financial advisor, so this is not financial advice. The indicators are basically displaying what to me is probable, and from that, I am forecasting what is probable, not necessarily telling you if you should buy or sell. All right, with that being said, remember that November bounce that we saw? Yeah, that November bounce was it bouncing directly off of our orbit line for our infinity band on our daily time frame. SPY's like, no, I don't want to go back under that. I just crossed over that in May of 2023, had this nice rally. The second half of the year, I'm going to pull back, come right back to it in November, and then to the moon, right? And so that's where we are right now. So we are nowhere near that 418 valuation, but hear my words and hear me clearly. The fact that the infinity band is sitting at the very top of the band, look at this, guys. It's been a very long track. So literally, this is the bull market that started all the way back in 2011. It's only had a couple of dips at the COVID-19, roughly around 2015 at March. There's only been a couple of times that we've actually gone below that line for any period of time. And when we did, we bounced back hard. So the fact that we did the same thing in November is no surprise. We bounced, and this is where we are, which means that there is a day of reckoning that has to come soon, but how soon is the key question. So since looking at that 418, that's still only technically a 20% bounce from where we currently are, although it looks a whole lot uglier on paper. All right. If you were sitting here and you made it, and you're up 100, that means you're up about 25% return from that November bounce. Hopefully you'll lock in your profits and not let them take them from you. Otherwise, hey, why waste half a year when you don't have to? Okay, I'll get off my soapbox and we'll continue on to the weekly time frame. Looking at this is, once again, there's that bull market saying, hey, here we go, and up, 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 up. There's it testing that line saying, no, we can't get under it for the COVID-19, and continuing on up. Life has been really good for us and our band so far in the system, but we have to make sure that we don't get greedy in the process. Even the weekly time frame is saying, hey, we're overdue. We were able to hold the compass and momentum line in April, but hey, let's not get greedy. Let's make sure that we win. Also on the weekly time frame, because the weekly is 5 times the magnitude of the daily time frame, it's calling for blood. Looking at that 322.45, I can't even imagine that number from where we currently are. And hopefully you can and you won't have to. So please take the opportunity to check your portfolios and don't let those monies escape your grasp. Also, if you've been following along with us, we've introduced our orbit line, which lets us know when and where things get hairy, or basically when we should check again. The orbit line is looking at 395. So on the weekly time frame, if we ever see the S&P 500 anywhere 395 within the next few months, we need to see if it will hold that position or if it will once again bounce over it, or if it will actually slowly drift under it, allowing a bear market to begin. Like I said, this is one of the longest running bull markets in the history of bull markets. So please be careful if you're playing out there. So let's go talk about cryptocurrency. Crypto has done a lot of nice and a lot of mean things, and it depending on when you bought or when you decided to stay or go in the system. So much like the S&P 500 governs what's going on with the overall U.S. stock market, Bitcoin is quite similar. It tells us what's going on with the overall cryptocurrency market. So same thing is going on. We got the COVID-19 March 16th bounce where we got those Z on our indicators letting us know that, yeah, that's the bottom. We really should be buying here. Hope you are. And then from that bottom, when it got down to hold on, let me see, make sure. That's what's going on. All right, no worries. All right, we're still on the S&P 500, but we will continue on. So looking at that's why those charts didn't look quite right. All right, looking at our 4-hour time frame, we see that basically there was a top around 63.93, and then basically it said, you know what, hold my beer again, and it got all the way back up to about 60, 70, 73-ish. Those Z's are saying, hey, a pullback is coming, a pullback is coming, a pullback is coming. After it knocked 3 times, it actually did fall. We made it underneath our orbit line, but from where we are, this is what's very crucial right now. The compass line has made it back over the orbit line, and the compass line has made it back over the RSI line for this apocalypse band. So the question is, and it looks like even here, the trend top and trend bottom are also sitting on top of support on our 4-hour window. So there is a good chance that we can actually see some more up. How much up? Well, that all depends on volatility. And once again, don't panic. Don't leave early if you can't help yourself. There's strong support around 64,505. So if it gets down there, there's a good chance that we may bounce. Also notice that 64,398 is a sticking point for this. Also notice that on the 4-hour time frame, the smallest band in our system is saying, yeah, we just began a new sell trend. So please be careful. So there could be about a 5% correction that could be coming your way for this particular cryptocurrency. So watch early going into Sunday/Monday to see where you land. Looking at Ethereum met its maker and its match, tried its best to get above the orbit line, was not able to, and slowly, like I said, that drift is killer, man. Looking at this, we see these pink candles. These pink candles means we are in the best time to sell zone, which means all this time that it's been selling, literally since around mid-April, this guy has been set up to go down, not go up, but will it be able to break that cycle? We do see that the trend top is above the orbit line. Will it be able to do a one hard push to pull the rest of the trend top and trend bottom trend above that orbit line to get us into a shorter term buy trend? But also we still have to contend with that 33.38 valuation that could hurt us more than help us in the longer term. So on this time frame, 4-hour time frame, the advanced band and the apocalypse band are looking quite red, and looks like the apocalypse band is saying, no, we're just getting started. And this is not the end of a sell trend. This could be the very beginning for a longer term. So we're going to be watching Ethereum real closely to see where it goes. Looking at Litecoin did the same thing that Ethereum did, got to the orbit line, and then just couldn't pull itself over. Luckily for Litecoin, though, on the 4-hour time frame, nothing is lit up saying that it has to do anything because it's well within its right. However, the RSI, the advanced, and the apocalypse band are saying, hey, we are in a short-term sell trend, and this is just business as usual, so steady as she goes. Meanwhile, Shiba Inu surprised me a little bit. It was able to get above that orbit line, but then guess what? Slowly but surely crossed back under, and then to add insult to injury, it added an X to the screen, which means that on the longer term time frame, 4-hour time frame for our Atlas, it's just beginning a brand new. The system just detected a new sell trend that is just beginning, and I never like to see X's close to that orbit line because that just it almost means nail in the coffin. It's time to go. Looking at Solana. Solana basically has gone and has gone. It's had a nice run. I'm not going to pretend that it has not. They got from 122 around May 1st to where we are is 169. So, okay, it had about a 20 or so percent gain in that time. So once again, folks, don't get greedy. Make sure you take your money and don't let them take it from you. So 4-hour time frame, it is saying Infinity and the Apocalypse Band wants to go back and visit these lower numbers. So while you have your money, make sure you hold on to it. Check, please. It's time to go. Let's go take a look at Dogecoin. Dogecoin, once again, orbit line saying, nope, no dice, you're going down. And down it has been going. All right, let's go take a look at a couple more of these, and then we're going to go away. Looking at Mara. Mara had a lot of potential. It's one of the U.S. stocks that basically follows cryptocurrency, but it's having the same pain that everyone else is having. It can't get above the orbit and the RSI line for the Apocalypse Band on the 4-hour time frame. It's tried a couple of times, but I'm seeing that our trend top, instead of getting further away and pushing up, it's basically hugging that line, which means eventually it's going to fall under, creating more resistance where it won't be able to get over. And sooner rather than later, we should be falling down. Looking at this, just from statistic and probability standpoint, the advanced band is sitting at 6.5%. The Apocalypse Band is sitting at almost 7%. So that means it's definitely in sell territory. The lines have definitely already crossed. So now we're just waiting to see how far it goes. The good thing is if you're trying to basically find a nice exit, looking at our dash indicator, it says that basically anywhere in the $20 to $22 range, if it can basically have that volatility. Remember, to get down, you have to have up first. So I would like to see for it basically try to get back to at least about 22, not be able to make it, and then fall. The inverse of that is if it falls and hits about 15, once again, pick it up with everything that's inside of you, and then watch it ride back up. All right. So let's keep on going. Let's keep on going. Let's talk about our bread and butter. We're going to go to our Forex charts. Forex charts. Let's go take a look at DXY. DXY has been having a bad day. Hard time. Remember I told you about that X near the orbit line? Never a good thing, and it never looks good. Also, when we see that the trend bottom had already crossed under, that X just had an insult to injury, and so down we went. The good news is, once again, in order to get more up, you have to have sharp motions in the opposite direction. That being said, this whole fall from grace, we went oversold, got down to about 104.05, and then sharply said, nope, we're going back up. But probability still hadn't expanded enough, so it dropped again, and now it's pulling itself back up. And as you notice, basically it went from going, hey, we're going down to, hey, wait, we might be going up a little. So once again, all we're doing is watching probability wiggle its way into higher depths. The thing that we must pay attention to, however, is our compass line and that pink line. Those are two pivotal points that we have to see stay away from each other going into this week. If that blue line crosses underneath that pink, that is not a good look on the dollar at all for a sell trend. I mean, for a buy trend. So anything that's going against the dollar will continue to get stronger if we cross under that pink line. So New Zealand, let's go take a look at New Zealand real quickly. New Zealand, the compass did cross over that pink line, and then everything broke loose, right? So we're seeing that, hey, we crossed under. Everybody was underneath the pink line. It wasn't happening. Nothing was going on. And then all it did was march. The great thing about probability, when it wants to go, if it can maintain a constant speed, it will allow probability to expand to accommodate whatever it wants to do. So we saw NZD USD march up to about 61.47 or 61.41.5, and then realize that, oh, wait, we got here too quickly. Sorry, my bad. And then it pulled back just a little bit, and now it's pulling up again. Once again, anytime you want to see more of a certain direction, you have to see it go in the other direction, hit an overbought scenario, and then what you expected will actually happen. So watching this, we do see that the advanced band is sitting at 81% probability, which means anything above 70, there's a pullback coming, and the RSI line does not disappoint. It's already saying, hey, we've already crossed. Get ready for the worst. So let's see what happens longer term from New Zealand. Looking at AUD, USD, we're underneath. We got dollar signs. So once again, probability is running out, and it's running out on the actual band and time frame that we're on and that we're set to. So that's why we have a dollar sign instead of an O. And once again, the RSI on this time frame is saying, nope, we're just about to begin. And notice that the populist band is also sitting at 81%. So basically, things are just starting to turn over. Let's see how long it takes for them to get back to normal and see if we can make some profit in the interim. Once again, let's get our dashboard up there. Come on, dashboard, you can do this. There we go. Also, Euro USD, same thing. We got high probability, not as high as the others, but it is starting a slight drift into a new short-term sell trend on this 4-hour time frame. So going into Monday, Tuesday, expect a little bit of down, but not a lot, versus the US pair. GBP USD, I think it's a little bit of the same, but as long as, and yes, it is. So the RSI line is just underneath, and we did see a large move to the upside just before the end of market close. So let's see if it follows through and pushes us down as expected. All right. Speaking of checks, who's been checking in on JXY? JXY, are you feeling okay? Are you feeling better? It's been having a very rough go. So rough that it even pushed a Z out and got down to 63 yen per dollar, which basically made USD JPY quite happy, but made a few of us quite sad if we were not playing it that way. So 155 is where it's currently at. Is at the dollar versus the yen, but it's not sitting in a good place at all. But it is setting up nicely to try to test its orbit line at that $66 rate. If we can get up there, and once again, I'd like to see one of these nice pushes where it basically just hugs the line and surprises everyone. But until then, JXY is on a tear and has been falling from grace, falling forever. Look at this. This is one ugly chart. If you've been playing JXY, once again, this is one ugly chart. All the way down here, all the way since March of 2021, we've been in a sell trend. After literally 2020, it hit a crescendo, giving a nice cross saying, this is the top. So after doing that, a lot of people had to pay a lot of people, and JXY definitely has almost had, if not a complete 50%, or rather 33% pullback. It is definitely hurting from where it is now. Just to get back to where it needs to be, that is a 50% return. So let's see if we can get some of that 50 going the other direction. All right. That's all I got for now. Thank you guys for joining us, and make sure you do check us out and After the Bell on Wednesday. Talk to you soon. Thanks. Bye-bye.